Okay, how are partners compensated within the partnership activity? Well, partners are not paid salaries. Rather, they share based on some percentage of the profits or losses that are generated by the partnership activity. Okay, so the partnership agreement could allocate one partner to have 20% interest and another partner to have 80% interest of the partnership. Now, of course, if they were subject to audit, the Internal Revenue Service would require some justification for that allocation of ownership interest and profits and loss interest between the partners. And it generally would have to do something with contribution of capital or work product or whatever to the partnership activity, and that would need to justify the allocation of ownership rather than having an equal split between the partners in the partnership, which, as I say, is common when you have one partner dedicating more time and effort there. It simply can't be an allocation that's meant to avoid some level of taxation. In that case, it would be any attempt to separate or veer from the equal ownership rights of the partners would be disregarded, and each partner would be attributed with an equal share of profits and losses of the partnership activity. So, given that the partner does not receive a salary, that the income passes through or profits or losses pass through to them, and it's reported on their individual income tax statement. It is the case that in some cases the partners will be subjected to an unequal amount of taxation by accident. Partners have to be conscious not to have one party contribute just activity, just work product to the partnership, while another partner capitalizes the business with cash. In that situation, the partner that's contributing services could be taxed on a concept known as phantom income. They could be, so let me give you an example. I contribute $20,000 to the partnership. Someone else contributes time and effort to the partnership, and we split it 50-50. Well, at the end of the year, if they have not contributed some level of capital to the business to equal that $20,000, then they will be subject to tax as having received $10,000 in profits or in the business entity, and that's known as phantom income. So that's something to be aware of in the partnership. But generally, as I say, the revenue or income is generated from the partnership. The expenses are deducted out. It generates a profit, and that profit is passed through. You report the partnership profits or losses on a Form K-1 that you actually report it through a reporting filing that you send to the government, and then you distribute K-1s to the individual partners so they can include that amount of profits or losses on their individual tax return when doing their individual taxes.